Our next guest has data that shows China's modest economic recovery is already losing steam. Joining us now, China Beige Book COO Shehzad Qazi. Thank you so much for being here, Shehzad. So I took a look at your December report, shows declining pricing power in China hitting profit margins, hiring slowed, spending weakening. This doesn't sound like the post-COVID recovery that the China bulls were hoping for.
Yeah, you're absolutely right, Leslie. I mean, this year, the China watching world has suffered pretty badly because all the reopening bets have turned out to be almost entirely wrong, partly because the expectations were so unrealistic. But what we're seeing now is that while there was some amounts of true organic recovery and rebound in China, starting in the second quarter, continuing almost through the third quarter, but much of that seems to be gone now. And the economy is most certainly beginning to lose steam just as we get into 2024.
Your report focuses on both home builders and residential realtors reporting declines in sale prices amid some volatility on the commercial real estate side. So I want to hone in on what's going on in the property market there. There was some Bloomberg data that showed property sales will decline 1.8 trillion yuan in China this year. And the Wall Street forecasts look very, very grim. Do you see any sort of bottoming on the horizon for the real estate market over there? And what does the interplay look like with the overall economy and just the potential contagion effects?
Yeah. Well, first of all, right now, property prices are at some of the lowest levels that we've ever seen on record, and sales are struggling and suffering quite a bit. That said, we've seen that there has been policy support through the better part of this year to help stabilize the sector. We've seen it more specifically in terms of mortgage rates coming down almost all year long. So we should potentially start to see some positive effects off that into the first half of next year. What we're seeing is sort of a small dose version of providing stimulus and liquidity support rather than all-out rescue of the sector. Again, the hope is that within the first half, you begin to see some improvement, because the reality is so much household wealth has been destroyed over the last several years. It has had a real effect on consumer sentiment and consumer spending, and it has brought down, obviously, many other parts of the economy with it.
Is a little bit going to be enough, though? And do you think that China has the wherewithal from a policy standpoint to turn things around? Because, I mean, you've got a 1.8 trillion yuan kind of gap there, at least just this year alone. So that's not something that's going to be cheap. It sounds like they really need to spend heavily to kind of work their way out of this problem in particular.
Chinese policymakers are working really hard to walk this fine line, and it's very tough. That, they don't want to reinflate the property bubble. At the same time, they do want to provide some breathing room. They do want to help the sector stabilize and find a floor. And accomplishing that, of course, is going to be a tough and challenging task. But the reality is that they're not going to opt to do much more. Property will never go back to being the type of big, massive driver of GDP and economic growth that it used to be. And that's, of course, tied into the fact the Chinese economy is inexorably slowing down now.
Hey, Shehzad, it's Brian. Thanks for coming on. So if it's not real estate, then what will drive China? Okay, I think of China as two things. Sort of the manufacturer to the world, low cost and often low margin items, but really just kind of real estate on top of real estate. So if it's not going to be real estate, are we just going to go back to what China was, which is just, again, a low-cost manufacturer to the world? Because that's not a great value-add economy.
Yeah, the reality is, for the next several years looking out right now, there isn't an obvious growth driver in China. So you're going to have overall growth continuing to slow. I believe that 2024 will be slower than 2023 was. And you're going to see parts where parts of the economy are going to continue providing support. Manufacturing will probably be okay, especially if we get a soft landing scenario out here in the U.S. and so forth. Parts of the consumption market will probably be okay. Things like EVs and auto sales will probably continue to drive growth, but there isn't one sort of champion anymore, one reliable growth driver. And that's part of the uncertainty that you're now looking at when you think about China over the next 5 years or perhaps even a bit longer.